Charlie Caden here in our Chicago headquarters. Let's focus on the precious metals market now. Joining us to discuss is Derek Macpherson, the CEO of West Point Gold. Derek, thank you for being with us this afternoon. I'd love to just start with your thoughts on the price action we've seen in gold just this year alone. Upwards of 60% moves, just this year.
Yeah, gold's been on fire this year, and I think it's a direct kind of driver both on sort of institutional central bank buying, but also on we're starting to see the West kind of step in and start to buy gold as well, which I think has been very interesting. 2023, 2024, more Eastern central banks that were in there, and now you're seeing Western investors come in, which makes it like a kind of a almost a second leg in the gold trade. You're seeing the GLD add tons. You're seeing Western investors start to step in.
And how meaningful is that shift in physical gold from west to east in terms of global economic power?
Well, I think it really relates back to what happened with Russia when they got shut out of the global SWIFT system, and so that is a significant driver. If you're a holder of U.S. dollars and you think you might need those U.S. dollars to fight a war, you need to get out of those U.S. dollars and get into something that you can trade with anybody, and that's where gold came in. And I mean, if you look at the largest buyers of gold, it's been China, it's been Russia, where when they could, now they're selling to fund a war effort. It's other countries or it's been India, and it's other countries that have in that position. And I think that's a massive shift from past gold markets. Past gold markets were often were driven by the West. They were driven by investors being concerned about overall markets or looking for that inflation hedge. And this is really an economic hedge, a large scale economic hedge that they're after. And so these are steady buyers that are a lot less price sensitive and can push the gold price a lot higher.
And Derek, you said in the notes that you sent over that the gold market is no longer driven by the investors themselves, but you actually believe it's driven by the governments. What has changed, and why did it change now?
Well, I think back to what I spoke to. It's that policy. It's the weaponization of that SWIFT system that occurred, and so the large central banks, that think, well, I might need my reserves to actually fund my government or fund my country. And if I can get shut out, if my reserves are in U.S. dollars, then I don't have access to them. So that's part of it. The other part of it is that gold. I mean, while the gold price moves in U.S. dollars terms, the gold price really doesn't move. The reality is that gold price is relatively flat. Just the value of your dollar goes down. And so the other thing that's driving the gold price is global liquidity. But global liquidity is coming from governments spending more money than they actually have. And I think we're seeing a lot. Global liquidity is now reached an all-time high, and that all-time high in global liquidity has then it's pushed money into the general markets, which we've seen, although they're a little softer today, and it's pushed a lot of money into gold as well.
So as we see the pivot of governments starting to drive a lot of this price action in the gold market that we're seeing, could a tightening supply of physical gold actually limit any of the geopolitical leverage that we have here in America?
Yeah, I think gold is a finite asset. It's why it's always been that monetary metal and concern. There isn't a lot of gold mined relative to the gold that's sitting on surface, and that's also why you've seen a lot of countries start to try and repatriate their own gold. Right? We just saw the most recent headline is out of Italy, but we've seen a lot of other countries as well. Gold that historically was stored in the U.S. or stored in London is now being these countries are wanting to repatriate it. As they say, ownership's 9/10 of the law. So you want to have that physically in your hands. And so as that gold goes offshore from the U.S., the U.S. loses its leverage because those countries and central banks now can potentially transact in gold instead of having to transact in U.S. dollars.
And how exposed do you think the U.S. currently is, if they start repatriating this gold? Because as you mentioned, ownership is 9/10 of the law. But also if we start to continue to see this consolidation in the Asian markets.
Yeah, I mean, the that's an interesting point. I don't know how exposed the U.S. is from a monetary point of view. The U.S. dollar is still by far the most used currency in the world. There isn't a sudden shift coming here. It's more of a gradual change. I think where investors should be paying attention to, and where there's some risk is on physical markets. While gold trades a lot, on paper in North America and in the Western world, it really trades physically in Shanghai. And so that, I think, is a key point, is that the pricing mechanism of the paper updates is one thing. The pricing mechanism of physical gold trading hands is another, and frankly, the Western world's losing control of that mechanism, as we've lost control in many other commodities as well.
And so you mentioned the investors, and for the investors who are watching, who are interested in gold, what's the best play here with the price action that we're seeing? Is it in physical gold? Is it in gold-tied equities and ETFs here? If they want to make an entry point, what do you think is the best approach? And also, where do you see gold going, by end of year or early 26?
Yeah. So I guess two questions there, and I think the first on the on where to invest, and I think that's a great question. When you're investing in gold, there's sort of multiple legs of a gold cycle or a gold bull market, which feels like we're in right now. The first leg is actually the physical commodity, and that's really what moves. And I think, and it actually outperforms all of the underlying equities, whether it's the gold companies or the developers, the explorers. And so right now, where we are, I would say, is that we're starting to reach the end of the commodity outperforming. Now, the commodity, I think, is still going to go up. And and I don't want to put a time frame on this one, but if you look at historically at gold bull markets, those markets tend to run in the 8 to 9 times the gold price increase. So if you were to take that back to sort of where the low was, you might be looking at $8 or $9,000 an ounce. Now, that's certainly not a 2025 or 2026 prediction, but that is kind of maybe the direction and scale of where we're potentially going. So, but as you get later stages in a bull market, the one thing that you do want to look at is the equities, those companies that have leverage to it. Because while gold might go up by a dollar, if you look at some of the producers, that's actually a dollar that's being added to their bottom line, right? They all just reported record. If you look at the large producers, they all just reported record. Uh, Profitability and revenue, et cetera. Though that was on $500 lower in the gold price, because that was backward looking on Q3. We're now $500 higher going into the end of Q4, and so those companies are going to continue to accelerate. And gold market, relative to some of the broader markets and that you were speaking about earlier before I came on, is the gold market is very small. And so when the money flows into those, when the generals go in and see, oh, there's these gold companies are really profitable and their earnings are growing at a significant rate, money flows into that space, and because it is a smaller sector, you get acceleration on the producers. And so the phase that we've sort of just started is the fact that those producers are starting to accelerate. And then as we get later on, and hopefully you'll have me back on for that, we get into sort of developers and explorers, which are further down the food chain in the resource space, but have even more torque than the producers. And obviously West Point Gold fits into one of those, is an advanced explorer.
Yeah, and Derek, this will absolutely not be the last time that we chat about gold, especially if it continues on the tear that we've been seeing so far this year, hitting a 6-week high today. But Derek, thank you for being with us to talk gold trends and also potential investment opportunities there. That's Derek Macpherson, the CEO of West Point Gold.